The way to think about the retail space today is to think about what has limited competition. Brands matter. Amazon's taking away mall visits, but it's not taking away brands. So our top pick this year has been Nike. It's performed very well, helped by the most recent quarter last week. We also have a big pick on Tiffany. So Tiffany, you're not going to buy a $20,000 piece of jewelry on the internet. So most of the winners this year in the first half of the year have been companies that can't be Amazoned, as well as companies that are basically value plays for retail, off-price retailers, or basically retail stocks have been down dramatically. It's trying to find the stocks that aren't going to go down for the back half.
So even with a huge gain in Nike shares off the back of earnings, you would say continue to buy the stock?
Yes, very much so. We really believe Nike has a big play in terms of no FX issues in the back half of this year into the next fiscal year.
Or
in
favorable
2018.
FX.
Yes, favorable FX in fiscal 19. In addition, we like the athletic sector generally speaking. Again, there's only three companies that really matter in that space. It's Nike, Adidas, and it's Under Armour. Under Armour is a name where most of the sell side, in fact, all the sell side, pretty much dislikes right now. So what we're recommending to our clients since the month of March is to go into Under Armour, go into Nike, play the strong athletic cycle that we see in the marketplace today.
Right.
And there's two companies that really matter.
So Amazon buys Whole Foods or wants to buy Whole Foods. Do you start to take a look at some of the names in the sector, beleaguered names with a physical footprint, and think they could be targets for somebody like an Amazon looking for some physical presence and some just sort of brand?
Yeah, I think Amazon tells you with the Whole Foods acquisition that retail matters. What I think is interesting about the retail space, generally speaking, it's under-owned. And under-owned does equal undervalue. And I do think that, as Joe said earlier, off break, we do see the ability for retailers that have strong cash flows to basically improve those cash flows by cutting their store bases. If you look at retail over the next 2 years, a majority of them can close 50% of their store leases within the next 2 years. So that's an ability to rationalize your supply, match your supply with demand. The consumer is actually pretty strong. $2 gasoline is pretty good. It gives the ability for the consumer to spend a lot of money, and stores will matter in the long term.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.